So we were saying that we don't look at ratios in isolation. We have to look at it in context. It's in a bigger context. We have to benchmark it against time, compare it with the previous performances. Okay, of course, not so far in the past, maybe 2 years, 3 years, and then compare it with the direct competitors or the industry figures. And of course, take a look at it in the context of other ratios also. So financial statements analysis is important. However, extreme care should be taken so that we don't read too much or unnecessarily infer from the financial statements. Okay, take a look at this. If we read this, guys, financial ratios are no substitute for a crystal ball. Financial ratios cannot really predict the future. They are just a convenient way to summarize large quantities of financial data and to compare the firm's performance. The ratios help you to ask the right questions. They seldom answer them. Okay, so we take a look at the ratios with a grain of salt. Okay, they're there to help us analyze and dig deeper and just become a just like a detective. We become like sleuths and then dig deeper and try to understand more what's happening to the company. Okay, so let me just go through some parts of the text so that you'll be guided. So it's important, guys, to read. Okay, financial ratios are usually easy to calculate. That's the good news. The bad news is there are so many of them, and worse, they're presented in a long list that seems to require memorization rather than understanding. So the main objective for doing financial ratio analysis is to appreciate more, understand more the company, and not necessarily to come up with a list of metrics. Okay, so that's very important. Okay, we need financial ratios because we need the managers, the financial managers, to be guided. Okay, for example, with the use of ratios, they'll be able to answer how profitable are the investments compared to the cost of capital. Okay, so if we go here, guys, this can be found also in your in the PowerPoint slides. If you take a look at this, on top, we know very well the main objective of the organization. The primary objective is to maximize shareholder value. Now, the question is the company able to do that? Is the company able to maximize its shareholder value? As to the question, how much value has been added? How much value has been generated? How much additional value has been created? That can be answered by some ratios. So there's what we call the market value ratio, okay? Market value added, MVA, and also the market to book ratio. So these are ratios that can be used in order to answer that question. Okay, again, guys, with a grain of salt, because these ratios are computed based on the financial statements. And we know that financial statements have follow certain gaps, okay? Gaps that might not be not reflect the reality. Okay, that's the sad part of it. Okay, so aside from that, we know that what are the drivers of shareholder value? We know that it's investment, financing, and dividend decision making. So as far as investment is concerned, is the company profitable? As far as the investments is concerned, their investments are concerned. We know that the companies, in order for a company to pursue a certain project, we know that the IRR should be greater than the WACC. The internal rate of return should be greater than the weighted average cost of capital. We know also that the net present value should be greater than 0. But there are other measures, guys, that we can look at. For example, EVA, economic value added, or there are returns. ROC, return on capital, ROA, return on asset, ROE, return on equity, ROIC, return on invested capital, and others, RONA, return on net assets, etc. These are measures or metrics that can be used in order to determine or describe the performance of a firm. As far as investment is concerned, we can also assess whether the company is able to use their assets efficiently. And there are ratios for that. For example, we have the receivables turnover, inventory turnover. Okay, these are ratios that can be used in order to answer the question, is the company utilizing its assets efficiently? And then we have also, is the company earning from their sales? So you have the profit margin, okay? You have the operating profit margin and other metrics that can be used in order to take a look at try to answer that question. Okay, as far as financing is concerned, we have learned that it's very important for a business to have funds available. If the company does not have funds, that means finance is not doing its role, because funds are important because they fuel the operations. They fuel the revenue generating activities of the firm. Without funds, how can the company borrow or buy? How can the company buy raw materials, which is then converted to work in process and then finished goods? Without finished goods, there could be no sales. Okay, there could be no service. Okay, so these are very important. So finance plays a very important role as far as acquisition of the funds and the use of the funds. Okay, in terms of acquisition, is the company following a prudent financial leverage? Okay, because if the company is very leveraged, which let's say a very, very high debt ratio, that can be dangerous. Okay, a very high debt ratio might be too much of a risk for the firm in that they might not be able to service their interest requirements, interest payments. So how do we assess if the company is able to come up with prudent leverage, financial leverage? There are debt ratios that we can use. There is what we call times interest earned. There are ratios called there's a ratio called interest coverage ratio. Okay, so these are the things that we can learn about the company. So ratios are all about understanding more the company and perhaps be able to pinpoint what are their strengths and the weaknesses relative to time, okay, and relative to their competitors, relative to their direct competitors. Okay, another question, will there be sufficient liquidity for this current period and the coming period? Okay, so that can be answered by some ratios which I mentioned a while ago, like current ratio, quick ratio, and cash ratios. Okay, so this is a basic roadmap that we will be looking at this chapter. So we will be learning about different ratios and try to see at least how we can infer things about the company using the ratios. For 2.2, okay, so we have a brief review of what financial statements are. We're not going to again learn how to the process of the accounting process like journalization, adjusting entries. Now that's for accounting. At the onset, we're going to have the financial statements and try to analyze the performance of the firm based on the given financial statements. Okay, for 28.3 now, in this book, the example used is the financial statements of Home Depot. Okay, you are encouraged. No, I don't think, I won't use the word encouraged, but I'd rather say you are required, guys, to read this and take a look at how the Brille and Myers, the author of the book, presents how to make financial statements analysis. So it starts with the balance sheet, and then the income statement, and then the other statements. Okay, we'll have a review of these financial statements in a while, a very quick review. And then this now is looking at the efficiency or performance of the firm. So here, there's a discussion of market capitalization, how much the value is of the stock of the firm based on the market. And then there's this ratio, market value added. Now, you're required, guys, to read this portion. Okay, we're going to discuss not these ratios, but we're going to discuss another company and as an addition to this. Okay, because what's the use of repeating this when you already have this and you can learn this on your own? Unless, or if you have any questions about a particular page and how the computation was done, please feel free to message me. And I'll be willing to, very much glad to set an appointment with you so that we can discuss your question about the lesson. Okay, then there's this very important measure called EVA, economic value added. But despite its importance, now there's a caution also. There are other measures like accounting rates of return. This is return on capital. Okay, this is return on equity. This is return on assets. Okay, but there's a caution about these measures, problems with EVA and the accounting rates of return, which you should be reading, guys. Okay, and then in under 28-5, we have measuring efficiency. Now, kindly read this, guys, because it's very important that we understand when we're measuring ratios, there's a question of whether we need to use only the start of the year assets or the end of the year, or maybe the average. So kindly read this. Maybe initially it will be quite difficult to understand, but please read them twice or thrice, okay, for you to better appreciate this. But of course, we'll discuss this briefly as we move on to our ratios. So here are asset turnover ratios. We have inventory turnover. We have receivables turnover. Okay, and there are other turnovers. 28-6 talks about another type of ratio, the DuPont system. Okay, so this is actually you're breaking down the return on equity. Okay, we'll discuss this more. Okay, and then 28-7 is leverage. This is all about debt. Okay, the debt ratio, the interest coverage ratio, times interest earned. Okay, so these are part of understanding the financing performance of the firm, leverage and the return of equity. And the last parts will be liquidity also. That's very important. Okay, liquidity, I mentioned this a while ago, the current ratio, which is current assets over current liabilities, and then quick ratio or asset test ratio, and then the cash ratio. Okay, now the last portion of our text talks about the interpretation of financial ratios. So it's very important, guys, to read this, go through this, okay? And beyond the page, I will request you guys, you know what request means, guys? Try this, financial ratios for US companies as an exercise. Okay, now the last part here is just summary and then exercises. So for example, let's beginning with the end in mind, the following general advice to users of this ratio. Financial ratios seldom provide answers, but they do help us ask the right questions. Okay? There is no international standard for financial ratios. Okay? A little thought and common sense are worth far more than blind application of formulas. Okay, so here the author is saying that it's important to have common sense. Okay, and this one, guys, as I mentioned, you need a benchmark for assessing a company's financial position. It is generally useful to compare the company's current financial ratios with equivalent ratios in the past and with the ratios of other firms in the same business. Okay, so I hope this paints a picture of what to expect in the next few days as we discuss financial statements analysis. Further reading, and then there are exercises here. I hope, guys, that you will work on this, because when we go to the first long quiz, some questions will be lifted from these exercises. Okay? Okay, any questions so far as the background of this chapter is concerned? Okay, clear so far? Okay, could you kindly chat, guys, if so far clear yung discussion natin, clear yung summary natin? Hala, sorry. Oh. Ay, nako, sorry, guys. Oh, no. Oh, no, no, oh, no. Guys, so I have been talking all along and then you didn't see the screen. Guys. Pag ganyan, guys, favor naman, please. Paki-ano na lang, unmute nyo na lang yung sarili nyo. Kasi while I'm talking, guys, I really cannot see that sometimes yung chat, hindi ko nakikita, guys. So kung pwede, I would wish one of you just volunteered or just interrupted me. Kasi sayang naman yung, ang dami kong pinapakita, guys, from 28.1 up to 28.9. I was browsing through it. And unfortunately, none of you spoke up. No? So please, kung pwede lang sana, ano na lang, magsabi na lang naman, guys. Oo nga, pero iba din, guys, yung ano. John, thank you for your reply. However, guys, iba din yung nakikita nyo kung saan yung pinapoint out ko eh. Okay? Alright, so next time, guys, please help me, guys, kasi siyempre gusto ko rin kung ano yung dinidiscuss ko, nakikita nyo rin. Both visual and auditory, kailangan yun. Okay, some of you are not so much auditory, no? Some of you are taking information visually. Some of you are guys are okay with listening, but some of you might be more visual. Okay, so even if you might not be hearing me, but if I keep on pointing out visually, then you will understand it. Okay, ganun talaga, guys. We are different as far as getting information is concerned. Okay, so let me continue now. Let's open now the Excel file, and I'm going to insert here a new worksheet. Okay, let's have a brief review of what you learned in your accounting, and let's take a look at a review of the financial statements. Okay, so very brief review, guys. What are the different financial statements, okay, that are generated by the accounting process? Financial statements. What are the financial statements generated? The end goal of the accounting process. Okay, so let's identify 1, 2, 3, 4, 5. I'd like to have volunteers, please. Okay, so just unmute yourself. Anyone, raise your hand to be acknowledged. Hello, guys. Yes, Trisha, please. Thank you, Trisha.
One of the financial statements would be statement of financial position.
Okay, so what's another name for the statement of financial position?
Balance sheet.
Yeah, correct. So that's the balance sheet. Okay, balance sheet or statement of, okay, let me move this, of financial position. Financial position. Okay, thank you, Trisha. Okay, so let's, John, thank you for raising your hand. What's another statement, John?
Income statement, sir.
Yes, thank you. Income statement. Okay, income statement. Thank you, John. And then we also have Shello.
Sir, sorry, sir. Sir, statement of changes in equity po.
Okay, so let's put it number 4, statement of changes. Let me just use this sign. Changes in shareholders' equity. Shareholders' equity. Okay, I'm shortcutting it. Any other statement, guys? Okay, Shallow again.
Sir, cash flow statement.
Yes, correct. Cash flow statement. And then I think Julia raised also her hand. Okay, let me write cash flow statement. Yes, Julia. Would you like to share another FS, another financial statement?
Sir, I kind of forgot.
Okay, thank you. Thank you, Julia. Okay, Rob, how about Robert?
Sir, the notes to financial statements.
Yes, correct. Although the notes to the financial statement is not a formal statement, but they are footnotes to both the all the statements here. Notes to the FS, but they're considered as integral to the financial statements. Okay, let's quickly discuss these statements. Very brief overview, very brief review of what you learned in your accounting subject. So when we say balance sheet, what's a balance sheet, guys? What does this tell us? What do we find in the balance sheet? Okay, anyone again? Any volunteer? What specifically do we find in the balance sheet? What are the accounts that we find here? Okay, Shallow, please.
Sir, under the balance sheet po, you will see the assets, liabilities, and equity po, sir.
Yes, thank you so much. Okay, thank you. That's correct. You can find here the assets, the liabilities, and the equity. Okay, and we know that the assets are the resources owned by the firm. Liabilities is a financing provided by lending institutions or creditors. And then equity is financing provided by shareholders. Okay, so the balance sheet tells us of what? Tells us of the financial position, right? Or financial standing, diba? Tells us of the financial position or financial standing of the firm at a what? At a what? Specific what? Specific. Okay, yeah, somebody raised their hand. Sorry, I didn't see it. Anyone? Specific what, guys?
Specific point in time, sir.
Yeah, thank you, Robert. You're correct, no? Specific point in time. Point in time. That's why when you take a look at the balance sheet, you will find there as of, okay? Or XYZ balance sheet, and then December 31, or as of December 31. Okay. Point in time. Okay, so that's what a balance sheet tells us. There you'll find the assets, liabilities, and equity, and it tells us of the financial position or financial standing of a firm at a specific point in time. So it's like a snapshot of the condition of the firm on a specific date. So that if you see in the balance sheet, for example, cash in the assets section, cash 100. It means that on that specific date, December 31, for example, the cash balance is 100. But previously, December 29 or December 30, it could have been different. Or the following day, January 1, it could be different. So that on that specific day, December 31, that was the cash balance. Okay, so that's the financial position or standing of the firm at a specific point in time. So we find there the assets, liabilities, and the equity. Okay, so let's briefly. Okay, let's briefly. Okay, get back the pens. All right, so we say that, let's take a look first at the asset side. So GAAP, guys, generally accepted accounting principle dictate that assets are to be arranged. How are assets arranged, guys? How are assets in the balance sheet arranged? Yes, Shallow?
Sir, according to liquidity.
Yes, correct. Thank you, Shallow. Yes, very good, very good. Assets are arranged according to liquidity. So when we say liquidity, guys, what do we mean? Liquidity. Okay, when we say liquid, what's the root word there, guys? It's liquid, and it refers to? It refers to what? Yes, cash. It's closeness to cash. That's why in the balance sheet, guys, you'll always find the first cash because it's already cash. Okay, and then there's an order by which we present the accounts in the balance sheet. In fact, the word liquidation, guys, see liquidation, when a business becomes bankrupt and it folds up, the process by which it liquidates, the liquidation process requires that it converts their assets into cash, make it liquid to pay off their creditors and to pay off and to provide residual balance to the shareholders, if any, kung meron pa, no? Kung may natitira pa, after the company converts their assets into cash. Okay, so would you recall, guys, what do we find in the balance sheet? First is what? General classifications of assets. We have, to call this current assets, diba? And also, guys, what's this, guys? NCA, non-current assets. Okay, so let's define first our non-current assets. 1, 2, 3, 4. What are our non-current assets? Anyone? So this is just a very, very quick review of our financial statements. Non-current assets, guys, what do you find here? So we have the current assets and the non-current assets. What do you find in the non-current assets, class? Okay, any raising of the hands? Okay, yes. Okay, Robert, ano na lang guys, kung pwede, i-unmute yung sarili nyo ha, para so that we can save on time. Correct, Robert said it's intangible assets. Robert, where do I put this? Intangible assets. 1, 2, 3, 4. Which position?
Third, sir.
Third. Okay, here 1, 2, 3. You're correct. So this is where we put intangible assets. Take note, we have to put it in order because of the principle of arranging the assets in terms of liquidity. In intangible assets, as the name suggests, that cannot be touched. Or can you give examples, guys, of intangible assets? Anyone? Raise your hand or unmute yourself. Intangible. Unlike, let's say, equipment, which we can touch. Intangible assets, examples are? Okay, yes, Angeline?
Trademark.
Yeah, trademark, correct. That's an intangible asset. Meron pa? Thank you, Angeline. Meron pa? Okay, brand. Okay, patents. Okay, yes, Tricia?
Oh, sir, I was gonna say rin po patent, but
Okay, yeah. Thank you.
would
Thank you.
ano po, copyright po?
Yes, correct. Yes, patents, copyrights. Thank you, Tricia. You're correct. So these are examples of intangible assets. Okay, any other example of non-current asset, guys? Non-current assets. Yes, Shallow?
Franchises po.
A franchise, okay, where will franchise fall under? Okay, I'm not sure of franchise. Okay, franchise may fall under another, it might fall under another account here. But I'm not sure, but let's take a look at the general names of these assets. I have a feeling that franchise, I might not be mistaken, but it can be classified here, or it might be classified here. I'm not sure, but we can check. No, we can check if whether it's in the first one or in the fourth one. Okay, so
Okay po, sir.
yes, Angeline. Yes, sorry, I didn't see your hand. Angeline.
Sir, natural resources.
Natural resources. Okay, natural resources. Okay, they might. I guess, yeah. I think they'll fall under this one. Okay. Again, I'm not sure. I sort of forgotten. I have forgotten the specific classifications, but it might fall under this one. Okay. Natural resources. I think it will fall under this one, or maybe this one also. Okay. Yes, Abigail.
Property, plant, and equipment.
Yes, okay, PPE, property, plant, and equipment. Okay, I'm not sure if the natural resources are classified under PPE. I'm sorry, guys, I forgot. Or it can be classified as part of number 5. Okay, we can check that, guys. So I'm not very confident of classifying where the natural resources or the franchise will be classified under. Okay, any other? You're correct. Property, plant, and equipment. This is the third classification of non-current assets. Meron pa, guys? Yes, Abigail?
Other assets po, sir.
Yes, ito. Other assets. Ito yun, ano? Okay. Like deferred charges, ito yun. Other assets. So, ano pa? Yes, Tricia?
Sir, notes receivables po.
Notes receivable, okay. Pwede siyang, okay, saan nga ba notes receivable? Kasi pwedeng dito yan, okay, sa current assets natin, yung current portion. Yung long term, nakalimutan na po na yung classification. It might fall under this one. I'm not sure, guys. I'm sorry, guys. Although I finished accounting, but I did not really practice accountancy. Okay, I'm very much aware of that, but yung mga specifics sa ganyan, kasi hindi ko ginagamit. Okay, so I stand corrected. So maybe I'll write them here so that I can check next time where they fall under franchise, natural assets, and see the receivables, ano? What was that?
Oh, sir, notes receivables
Notes
po.
NR, no?
Yes
Notes
po.
receivable. Kasi pwede may current, ano to eh. My current, usually guys, short term lang to, no? But there can be a long term for that. And let me see where that will be classified. Okay, sorry guys, sorry for this, but let me check. Let me check where do we classify these assets under these general classifications. What about this last one, guys? Yes, Angeline?
Sir, land.
Land will be under PPE. So, andito equipment, no? Machinery, andito din. Land, andito. Okay. This one, guys, last one. L. Yes, Trisha?
Oh, sir, it's L po.
don't know.
I'm not sure po, pero I was gonna say po investments po.
Yeah, it's correct. Long-term investments. Okay, you're correct. Kasi may short-term investment, no? May long-term investment. Okay, so these are the general classifications of your non-current assets. You mentioned some specifics, guys. Now this will fall under any one of these. Okay, so I'm going to check that, guys, for our information. I'm sorry, I've forgotten. Okay, I've forgotten because it has been several years or decades since I last dealt with classifying accounts like this. Okay, I'm more into finance now and not accounting. Okay, so for current assets, guys, there are 5 classifications. So what are these 5 classifications of your current assets? Okay, and it's arranged according to liquidity. Okay, first is, anyone? Okay, yes, Abigail, sorry, I didn't see you.
Cash and cash equivalents.
Yes, correct. Of course, the first one will be cash and cash equivalents. Okay, thank you, Abigail. Next one, guys. See Abigail also again.
Accounts receivable. Po.
Yeah, receivables will be under this one. Okay, thank you, Abigail. Then let's see Shello.
Sir, inventory po.
Inventories. Okay, nasa 4th siya, no? Thank you, Shello. Then we have, okay, Marian.
Prepaid expenses po.
Okay, prepayments, that's correct. Prepayments. Okay, and Shello, yes?
Sir, short-term investments po.
Yes, thank you. Short-term investments. Okay, that's good. So we were able now to enumerate the general assets, okay? Current assets and non-current assets. By the way, guys, let me ask you a question. Okay, suppose you have a service organization, a service firm, okay, a barber shop, let's say. Okay, and then you find that they have this, they have, let's say, okay, what you have hair, what do you call that? Hairdressing, the one that you put on the hair, and then you have, let's say, alcohol. Then you have, let's say, you have what else? Maybe what do you call acetone for maybe for manicure or pedicure. So these are items that you find in a barber shop, in a salon, guys, or in a spa. Okay, where will those fall under? Where will those assets fall under? So let's say at the end of the period, you have a alcohol worth 1,000. You have acetone worth 2,000. You have let's say comb, okay, a supply of comb for 3,000, etc. Now these are assets. Where will you find these assets, guys? Are they current assets? Are they non-current assets? Okay, Shello, you answered. Oh, sorry, what was your answer? Supplies. Okay, so where's supplies here? Cash, STI, receivables, inventory, or prepayments? Will they form part of receivables? Hindi naman siguro, no? Kasi they were not sold. Will they form part of cash? Of course not. Okay, so where will they fall under? Will they be short-term investments? Will they be inventory? Will they be prepayments? What do you think, guys? Okay, paki-raise na lang ng hand or... Okay, Abigail, thank you. Okay, thank you, Shella, for clarifying. Abigail, why do you say that it's inventory? Did you say inventory? Sorry. Yeah, inventory, Abigail. Would you like to comment, Abigail, on your answer? Abigail? Asan si Abigail? Okay, any other volunteer, guys? Any other answer? Abigail says it's inventory. Okay, it's a supply that you might need in the future. Okay, thank you, Abigail, for your answer. Okay, let's clarify. Okay, it may be inventory or it may be prepayment, guys. Okay, let's define first what's an inventory. An inventory is an item that was acquired or bought or manufactured that is intended for sale in the future. Okay, so the question is, what are we going to do with those alcohol, with the comb, with the hair tonic, hair pomade, etc.? Are these quote-unquote supplies, are they there because they're intended to be sold to the customers? If they are, guys, if they are intended to be sold to the customers, then they form part of inventory, because that's what an inventory is, intended for sale. So in fact, you have now a business that's both service and trading. Service because of the salon, and also trading because they are also selling items to their customers. When is it prepaid? If it's used for the conduct of the business, so prepaid yan, kasi it's like supplies, no? Eh, parang bond paper yan, ginagamit sa office. Hindi naman binibenta, not to be sold. Okay? So you know very well, guys, that there are two ways to record that as far as accounting is concerned. You have the asset method and the expense method. So we will not go there, guys. But suffice it to say, guys, that for a manufacturing firm, you have 3 layers of inventory. What are they? Anyone? If it's a manufacturing firm, unlike a service or a trading firm, they don't have these 3 types of inventory. For a trading, it's just inventory. Okay. How about for service? It can also be inventory. But for manufacturing, there are 3 layers of inventory. What are they, guys? Yes, Shallow?
Sir, raw materials po.
Correct. Raw materials.
Work in progress.
Work in progress or work in process.
And then finished goods po.
Finished goods, yes. Thank you, Shallow. You're correct. Okay, so these are the layers of inventory as far as the manufacturing company is concerned. Now, it's different if it's a service organization. A service organization or a trading company will not have raw materials. They will not have work in process also. These are accounts that can only be found in manufacturing companies. They will have, well, not finished goods, they will call it inventory. Okay? All right. So these are the things that we just reviewed as far as the balance sheet is concerned. What about the income statement, guys? What does the what do we find in the income statement? Yes, Julia?
Sir, it focuses on the company's revenues and expenses in a particular period, and
Yes, very good.
it shows the company's profitability or their financial performance.
Yes, okay. I think Julia already answered everything. Thank you, Julia. So tama, no? Sabi ni Julia, so i-enumerate natin, no? Sabi ni Julia said that in the income statement, you can find the, okay, let's write it here, revenues, okay, the costs, expenses, okay, the profitability, whether it's a gain or a loss, okay, profitability. So Julia said that the income statement tells us of the financial performance. Financial performance, okay, financial performance, or we call it, okay, it tells us of the operating results. Okay, operating results of the firm at a specific, and Julia mentioned, it's a specific period of time. Okay. Thank you for that answer, Julia. Period of time. Okay, so this one, it's a period of time. Okay, the period can be 1 year, it can be 6 months, it can be 1 quarter, it can be 1 month, it can be 1 week even, and can be even 1 day. Okay, it can be even 1 day, but of course you will not find that much. No? I haven't seen really a financial statement or income statement that was for 1 day. 1 week I've seen, one month also. Okay, so that's what we can find in the, okay, in the income statement. Okay, revenues, the sales, the costs, okay, operating profit, net profit, all the other expenses, you will find that in the income statement. Okay. And then guys, what about the cash flow statement? What does the cash flow statement tell us? Cash flow statement tells us of the S, okay, or U of course, cash from O, I, F, activities for a specific, okay, blank of blank. Okay, so anyone would like to summarize that? The cash flow statement tells us of the blank. Yes, Shallow?
Sir, I'm not sure of the letter S po, pero if
Okay.
I know po, if I remember correctly, it is the use of cash po sa operating, investing, and financing activities for a specific period of time.
Yeah, very good, very good. Thank you. Thank you. Shallow is correct. It tells us of the uses of cash from operating, investing, and financing activities for a specific period of time. The S here is the sources, okay? Sources, saan nanggaling? Anong pinanggalingan, guys? So these are sources or uses of cash. Okay, pardon guys for the very poor handwriting. It's quite difficult to write with a digital pen, but of course, coupled or reinforced with this recording, I'm sure you'll be able to understand what I've written here. Okay, and generally after we finish this all, I'm going to send this to you, or I can just send first this portion. Okay, because when we take a look at the other worksheets, guys, okay, I want you to be doing that on your own, following along with me. Okay, operating, investing, and financing. Okay, pretty much what we have discussed about investing and financing activities. Okay, and then it's also for a specific period of time. Okay, so that's the cash flow statement. And the others, guys, the statement of changes in shareholders' equity, it tells us of the additions or subtractions or the changes as far as the shareholders' equity is concerned. So we might see there additional investment from shareholders. We can see there the results of the operations, the net income after tax. And then we can see there also the dividend that were distributed to the shareholders. And then also we can see there the addition to retained earnings. Okay, because we know, guys, from what we have discussed, have we discussed that? Yeah, from the net income after tax, a portion goes to flowing back to the operations in the form of retained earnings, and a portion goes back, is distributed to shareholders as dividends. Okay, so notes to the financial statements, guys, are just explanations of specific accounts in these financial statements, whether it's the balance sheet or the income statement or the cash flow statement. Okay, or even the statement of changes in the shareholders' equity. Okay, any questions so far, guys? So far, clear naman yung discussions natin. Okay, this is just a review. I'm sure you know them already, or you might just have forgotten them. But I hope that this brief review will refresh your memories about these financial statements. Again, why are we going back here? Why are we looking at financial statements? Because we're going to analyze them. We're not going to create or construct the income statement, the balance sheet. Tapos na yun, guys. You learned how to do that in your accounting subjects. Okay, here we're going to analyze. We're going to compute ratios and analyze what's happening to the organization. By the way, in this subject, guys, you will most probably you'd like to choose your own group mates, or I can randomize it, but you'll be grouped to groups of 4. Okay, most probably 4 guys, because this is a small class. And then you're going to choose a company, okay, and a benchmark company, competitor company, and you're going to perform a financial statement analysis. This will be due 3 weeks before the end of the term. Okay, so as early as now, you can start maybe talking to people who'd like to be part of your group. We're going to arrange that. I'm going to in our G Drive, we're going to set those up. Okay. All right. May I request you now to go to basic model, our worksheet number 1. We will work for the next maybe 3 or 4 sessions. We're going to work on this as part of module number 2. Okay, so I'd like to have a correction here. Okay, kindly correct this, guys. Sorry for the misplacement. Okay, so what are we going to do here? This is financial statements analysis. We're going to compute some measures like free cash flow, EVA, and there are others here. For example, net operating working capital, total operating capital, NOPAT, net operating profit after tax. Now, this was displaced. Kindly delete the recent year, Control X, and put it here on the last line. In the most recent year. Okay, sorry about that. Okay. Okay, then in order for us to be able to compute this free cash flow, economic value added, okay, we have to first understand the financial statements of this company, Advanced Technologies. Now take note that this is income statements for the year ended, okay, year ending December 31. So you can see that this is a period, and usually it's a 1-year period. So this January 1 up to December 31, 2020 and 2019. Okay, so for the whole year, the company was able to generate sales of 3 billion. This is billion because the figures are in millions of pesos. So there was a marked increase compared to 2019. And then the next line is operating cost except depreciation and amortization. Now, I'd like to ask you guys, depreciation and amortization are operating expenses. They're not financing expenses. Now, why are they singled out? Why is it that in some financial statements, you will see that depreciation and amortization are singled out? And if you notice that if we subtract net sales, if we subtract operating cost except depreciation and amortization to net sales, we will arrive at EBITDA, which is earnings before interest, taxes, depreciation, and amortization. Okay, so that's your EBITDA. Now, why is depreciation and amortization being singled out? What's so special about them, guys? Why are we singling out this and segregating them from the other operating expenses to arrive at your EBITDA? Why do you think is that so? Any idea, guys? Any opinion? Any suggestion? You don't have to be afraid, guys. If your answer might not be that accurate, it's okay. What's important here is we voice out our idea, and that takes courage. Okay, and that will come in, and that's good preparation for you. Any idea, guys? Why are we singling out? Why did we not single out the cost of sales? Why didn't I put it there? Operating cost except cost of sales. Okay, what could be the reason, guys? Okay, any guess? Okay, so I'm sorry, guys, in the interest of time, so let me just answer that. I wish I could give you more time. However, I'm looking at the time and we have only 20 minutes in order to reach up to line 78 to be at par with the other sections. Now, depreciation and amortization, guys, are singled out. Okay, so notice all the operating costs. So that will include cost of sales, maybe marketing expenses, okay, advertising, okay, transportation expenses, etc., insurance. All these are operating expenses, but only depreciation and amortization are singled out because, guys, of all the expenses, these are the only ones that are non-cash. Okay, so these are non-cash expenses. When you record depreciation expense 100, and then maybe at the credit is accumulated depreciation, for example, 100. The depreciation or the amortization, guys, are non-cash. We don't actually are putting out 100. Okay, so we single out depreciation and amortization because they're non-cash. Okay, and that later on, when we construct the statement of cash flows, you will be needing those items, depreciation and amortization. Okay, so that's the reason why we remove depreciation and amortization and exclude them from operating costs. Okay, all right. But of course, there's another way to write your income statement, and it could be more detailed. Okay, it includes all the costs, guys. But for this one, this is an abbreviated income statement. So one way to do that is to subtract all the operating costs from net sales except depreciation and amortization in order to arrive at EBITDA. Okay, so EBITDA is earnings before interest and taxes. Then we subtract now depreciation and amortization. So we're now here, okay, to arrive at earnings before tax, 283.8. Then this is a financing expense, okay, financing cost, okay, as distinguished from all the other operating costs. 88 interest expense, 60 for the previous year. So if we subtract that, we get 195.8 to 203.0. Okay, now we subtract tax. Now, if you notice, guys, I purposely did this to in order to bring home a point. You notice the formula here, F17 times 30%. So we know that the tax rate is 30%. So in order to compute for the tax, we multiply 195.8 times 30%. And this one, G17 times 30%. So a friendly advice, guys, when you're doing financial modeling, it's not good to put in your model an absolute. 30% is an absolute, it's a constant. And it will not be good to put it in the model itself. Why? What will happen if there was a change in the tax rate, or for that matter, any value of an absolute? Let's suppose it was 32%. So you will have to find where did you use that 32%, right? So here, then I'll have to change this to 32%. And this one also 32%. And in all the other areas or cells where you use 30%, that can become cumbersome. Okay. All right. What's a better way to do that? A better way to do that is to separate absolutes. So what I do usually is on top of the model, I put here the absolutes. Okay, so just by way of okay, just illustration. Okay, I'm going to put here tax rate, and put here 30%. Okay, I'm going to segregate it because I'm going to show you one important way by which we can use values like this, like absolutes. Okay, now you notice that this cell C1, C2 has a name. Yan, kita natin, no? We call this the name box. And this cell C2 has a name. All cells in Excel have their own particular names. Okay, this one, okay, I can see that it's H9. Okay, now I'd like to name this, instead of using C2, I'd like to name it as, I'd like to give it a name, another name. Okay, for example, we can name this as tax rate. So how do you do that? In the name box, you can type tax and then rate. It should only be one word, no space allowed. If you want to separate this, you can put here underscore or dash. Okay, I don't think dash is allowed. Okay, so it's tax underscore rate. So what am I doing? I'm giving this a name. This C2, I'm replacing its name by tax rate. Okay, and then I press enter. Okay, so now notice, guys, if I go here, it's no longer C2. The name is tax rate. So what's the purpose of that? The purpose, guys, is that if instead of using the 30% here, okay, so I'll do F17 times, since I know the name of that cell, then I'm going to type T. Okay, notice that when I type T, all the functions that in Excel that are T are shown here, and also the cell names. Okay, so this one in my worksheet, I have tax rate. I have two tax rate here. I think we use this one, right? Tax underscore rate. So I can just go there and tab. Okay, tax rate, and that will refer to that 30%. Okay, control enter, and I get 58.7. Now, the good thing, guys, is that I can copy this to the right. There, and you see the formula. It's G17 times tax rate. So that's one importance of giving names to cells, particularly absolutes. Okay, is that clear, guys? Paki-chat please kung clear so far yung paggamit natin, our use of this named range. Okay. All right, good. Now sometimes suppose, okay, let's do it here. Okay, suppose I'm in another worksheet and I would want to use that formula. Okay, so let's say is equal to 100 times the tax rate. So before, if you were not using the names, then you would go here and then find that tax rate in this worksheet and then click that, right? But that's not necessary anymore, because you already gave it a name. So we can write here is equal to 100 times T. Okay, so if I type T, guys, there, it will appear here. Okay, so I can access this name, which represents the 30%, anywhere in my workbook. Enter. So that's 30, which is because the tax rate here is your 30%. Okay, now sometimes there's a shortcut to giving names. What if, let's say, for purposes of example, okay? Okay, for example, these are absolutes, and you'd like to give names to this one. This might be the tax rate. This might be, let's say, the discount for something. That this might be something, guys, that are absolutes, that are fixed, and then you'd like to give this a name. So let's give this a name. Let's just call it name one. Name one. Okay. Name two. Okay, this is just an example. Okay, and then I'll highlight this. Okay, up to name 6. Now, what I told you guys was, in order to give this a name, I want to give this a name, name 1. You have to type here in the name box. But if you have 6 or even more, let's say you have 100, that will be quite tedious for us to be naming each of the cells one by one. So one shortcut is to highlight your absolutes, and then beside it should be the name, okay? So I'm going to tell Excel that the names of this cell, A, B, C, D, E, E1, E2, E3, E4, E5, E6, E7, their names are name 1, name 2, respectively. So would you know, guys, a shortcut for that? Anyone? Anyone who have used this function before? By the way, guys, in this subject, we're not only going to learn finance, we're going to learn, guys, and attempt to enhance our skills in Excel. Okay, so the shortcut, guys, because I'm running out of time, is there. You notice, guys, what happened? I pressed something and this came out. Create names from values in the, okay, Excel is guessing that the names are in the left column, and that's correct. Okay, that's correct. So I'm going to press OK here. But what was the shortcut? If you're using Windows, guys, it's Control-Shift-F3. Control-Shift-F3, and this is the shortcut, creating names from selection. If you're using Mac, I think it's Command F3 or Command-Shift-F3. So just kindly check that, guys, for the Mac users. Okay, so left column, guys. By the way, guys, from now on, guys, please make sure that you have your Excel ready, because we're going to use it in computations. Okay, okay. All right, what happened? If I go here, this is no longer E2, it's now name 1. This is name 2, name 3, and now if I click this drag down here, okay, so these are the names that I have in this workbook. Name 1, name 2. If I click name 6, and then it points me here. This is name 6. Okay, let me pause for a while. Is it clear so far? The use of names, the use of named ranges. It's called a named range. Is it clear, guys? Clear so far? Kindly chat, please. Kung yes or no. Okay, we're going to learn other tips and tricks in the use of Excel. Okay, how about the rest, guys? The rest? Okay, good. Thank you for those who responded. Okay, let's move on now, guys. Okay, we find here, guys, that from the net income, we have 57.5 was distributed as dividends. We call this, we have this ratio, dividend payout ratio. Payout ratio. And this is your retention ratio. Okay, the dividend payout ratio is simply equal to the amount distributed as dividends divided by the net income after tax. So it's around 42%. Of course, the amount flowed back to operations will be 1 minus 42%. That's 58%, because this constitutes 100%. Okay, so now let's go here, guys, to the assets. We have current assets consisting of cash, short-term investments, accounts receivable, inventories. There are no prepayments here. Okay, and then this one, net plant and equipment. Okay, notice, guys, that it reflects net plant and equipment. Just by way of review, guys, if you recall from your accounting, when you record equipment, it's usually PPE, property, plant, and equipment, and it should be at cost. Okay, and then you subtract here your accumulated depreciation. Okay, PPE. Okay, and then so you have your PPE. Okay, so PPE net. Okay, or net PPE. So if this was 1,500, okay, this is 500, let's suppose. So this is this minus this. Okay, 1,000. So if you recall, guys, accumulated depreciation is what we call contra asset account. So contra asset account, because it is always linked to an asset. Okay, just like accounts receivables, and then there is what we call allowance for doubtful accounts. Okay, so you have those. All right, so sometimes in the balance sheet, you only see net plant and equipment, and you don't see this. However, there will be a disclosure here, and it will be found in the notes to the financial statements. Okay, so for liabilities and equity, we have total current liabilities, Tatlo, accounts payable, accruals, and notes payable. Okay, accounts payable are trade payables. Okay, this happens when the firm is given a term. Right? For example, 15 days to pay your purchase. Accruals, what are accruals, guys? So unfortunately, guys, I don't have time to ask you. Okay, so I'm just giving out the answer in the interest of time. Accruals are expenses that have already been incurred but not yet paid. Diba? For example, utilities. So we first use utilities, Meralco, for example, or water, Maynilad or Manila Water, and then we're given the bill after a certain time. Okay, we have already incurred the use of the, we have already utilized those, and then we only pay later on. So that's an accrual. And then you have notes payable. Okay, for your total current liabilities, then you have this long-term borrowing, we call long-term bonds. And then if you add the two, total current liabilities and long-term bond, you have your total debt. And then for the equity side, you have common stock. There's no preferred stock, retained earnings. Okay, the addition of the two is 940. That's your total common equity. Adding your total debt and your total common equity will give you your total liabilities and equity, and it should be the same as your total assets. Okay, now that was a very quick review and a quick survey of the accounts here. Now we're going. Now I know you have learned how to construct the statement of cash flows in your accounting subject. So this will be an assignment to be collected, to be submitted November 3, guys, November 3. Okay, I'll post an assignment in our Canvas for you to submit in Excel in one worksheet, the cash flow statement for advanced technologies. Okay, in good form, guys, please submit the statement of cash flow for advanced technologies for 2020. Okay, so let's now go here, guys. We're asked to compute for the net operating working capital. Okay. So when in other finance books, you will see measures like working capital. So oftentimes when working capital is used, it refers to current assets, and net working capital is your current assets minus current liabilities. However, here you're being asked for the net operating. So there's a difference. So it's NOWC. So O here refers to operating. So the net operating working capital is equal to this one, operating current assets minus operating current liabilities. Okay, so let's go now to our balance sheet and identify what's our operating current assets and our operating current liabilities. So let's go here. Okay, so which are the operating current assets here? So we have 4 current assets. Okay, cash, short-term investments, AR, and inventories. Now, what are the operating current assets here? Inventories is an operating current assets, guys. It's used in the operation for the operations of the business. So is accounts receivable, operating din yan. Cash, guys, of course, it's operating. Kailangan ng cash para sa operations. This one, short-term investments, is not operating. Hindi role ng operations ang mag-invest ng short-term investments. This is financing. Okay, this is financing. So this does not belong to operating current assets. Only these 3: cash and cash equivalents, accounts receivable, and inventories. Okay, so that's our OCA, operating current assets. How about our operating current liabilities? Ang current liabilities natin we have 3, no? We have 3. Okay, accounts payable, accruals, and notes payable. Accounts payable is incurred in the ordinary course of the business, diba? Pautang yan ng suppliers, no? So that's operating. Accruals is operating. Pag gamit ng kuryente, ng tubig. Okay, utilities. Notes payable, guys, is not operating. Notes kasi, guys, IOU yan, utang, pero with interest yan. Interest bearing yan. So pag interest bearing yan, that's a function of finance. Okay, hindi role ng operations yan. Okay, so we have identified what are the operating current assets, operating current liabilities. So we can now compute for them, guys. So here, okay, our operating current assets will be equal to the sum ng, punta tayo sa current assets natin, cash and cash equivalents, comma, hindi kasama si short-term investments. We include receivables and inventories. Okay, so those three. Close, enter. Okay, and we are 996. Okay, in order to be consistent, guys, I'm going to, let's add 1 decimal place here. Because the others are in 1 decimal place, just to be consistent with our income statement and balance sheet. Okay, so we can copy this to the right, guys. Okay, kasi pareho yung position ng 2020 natin at saka 2019, diba? Pareho lang. Okay, so we have now our operating current assets. Okay, for our operating current liabilities, it's the sum of, we're going to sum up the current liabilities will be accounts payable and accruals. Okay, we're not including notes payable. Ang notes payable, guys, interest bearing yan, hindi role ng operations yan. Okay, why do we want, guys, to know the operating working capital? Because we want to assess the performance of the operations. Okay, and we want operations to be assessed based on what they're responsible for. They're not responsible for, let's say, short-term investments. They're not responsible for notes payable. So we should not be loading them. So NOWC will simply be the difference between your OCA and your OCL. Guys, it's already time. May I have 2 minutes? Permission, please. May I have your permission? I hope you grant this permission, guys. Tapusin ko lang hanggang row 78. Mabilis lang to. Okay, pwede ba? Okay, thank you so much, guys, for your understanding. Thank you so much for your patience. Thank you. Salamat, ha? Okay, so let's go here, guys. Okay, ito, we now can compute for our TOC, total operating capital. So si total operating capital is NOWC, meron na tayo niyan, plus net fixed assets. Okay, so let's be consistent with the term used. We used here net plant and equipment. So let's copy this. Palitan natin net fixed assets natin. Sorry about that. So here, net plant and equipment. Okay, and this one, I'm going to replace this. Net plant and equipment. Okay, hindi na kopya. Control C. Okay, here. Control V. Okay, there. Okay, we know already, guys, our NOWC. It's this one. Okay. Mamaya natin lagyan ng decimal. Mamaya ako na isi-set, no? So your net plant and equipment, notice, guys, net to, so we can copy that directly from our balance sheet here because our balance sheet reflects net plant and equipment. If what we're given is the cost, no, we have to get the net, not the cost. Okay, enter. There you go. Okay, so we can now, we just add them, no? Add. Control enter. Add. Okay, and then let me just give it 1 decimal place for consistency. And then last one, guys, just this one. Okay, we can now compute for how much was invested in total operating capital. Okay, so in 2020, it was 1796.2. And then this one, so how much was invested? It's just the difference, no? Yung difference lang. Nadagdagan yung total operating capital by 280. So if I add 1 decimal place there, it's 279.8. Okay, with that, guys, we stop our discussion. We're going to continue this next time. Take note, we don't have classes on Monday, but you'll have an assignment for Wednesday, guys, and it's the creation of the cash flow statement for this company. Okay. All right. So with that, guys, thank you so much for your patience. Maraming salamat. Keep safe. For those of you who haven't had your attendance checked, kindly please remain. Okay. Thank you so much, guys. Salamat.
Thank you, sir.
Thank you.
Thank you, sir.
Salamat.
Thank you, sir.
Thank you. Thank you, guys. Keep safe, please. Okay, anyone who's going to have this attendance check? His or her
Me,
attendance check?
sir.
Okay, sige.
Ayan po, sir.
Okay. Okay. Family name, please.
Nunez, sir.
Nunez. Okay, Juliana. Okay, thank you, Juliana. Who else?
Thank you, sir.
Thank you. Who else?
Sir, me po, Olivario.
Olivario. Okay, Shello. Okay, thank you, Shello. Oops. Okay, thank you, Shello. Meron pa? Meron pa? Okay. All right, thank you so much.
Sir, I have a question po pala.
Yeah, sure. Sige, sino to?
Shallow po.
Shello, sige.
Ayun, sir. Meron po kaming reading assignment due on Friday.
This Friday, ano?
Yung meron po nakalagay ata na reading assignment 1.
Oo, sige, sige. I'll clarify that. I'll put an announcement about that. No?
Okay po, sir.
O, kasi yung mga initial nun, hindi ako yung gumawa. It was provided by the department. So, I'll check that. I know naka-assign siya. And your question is, Shello?
Sir, yung under that reading assignment po, kasi there are two ways to assess whether po yung completeness po niya or yung correctness po per question. If ever gagradean po pala yung reading assignment, is it yung completeness po or yung correctness dun sa pag-answer ng question? Since reading assignment po
Oh,
siya.
sige, sige. I'll look at it. Honestly, hindi ko pa nakitaan kasi binigay lang sa amin yun. No? I'll look
Okay
at it
pa.
and then I'll provide clarification for that.
Okay po. Thank you,
Okay.
sir.
Sige, thank you, Shello. Thank you. Salamat.